Now, with a commodity money like gold and silver, well, that takes labor and energy to pull out of the ground and then mint it, etc. So you're really trading your labor for somebody else's labor.
Precious metals such as gold, silver, platinum, etc., they are rare and have high market values. The demand for these metals also increases as civilization advances. With the right investment strategy, you can reap the rewards and secure your future. You may have seen your older generation hoard gold and silver bullion as precious metal investments. Among all the precious metals, gold is the first. Previously, precious metal investments were heavily reliant on gold, which remains a preferred choice for investors seeking precious metal investments. The second popular investment option among precious metals is silver, as well as being used as a backup option in times of economic uncertainty. Apart from being a precious metal, it also has various industrial applications. One of the most common ways to hedge against stock market risk is to invest in precious metals, with the most popular investments being silver and gold. In today's video, we will tell you why Lynette Zang says that silver and gold holders about to get rich. But before we get into the video, make sure you subscribe to our channel and press the bell icon to never miss an update. Gold is the only commodity, and it's a commodity-based currency that actually performs the original four functions of money, which is a measuring tool, a bartering tool, a short-term store of value to be held pay fairly for your work, and a store of value for the long term. So no matter when you use that money, you always get paid fairly for your work. With commodity money like gold and silver, it takes work and energy to get it out of the ground and then minted. So you're actually trading your job for someone else's job. But if a government wants to tax you, obviously you might not agree. So they transitioned from that system to fiat. And fiat means that it is a currency legalized by the government. And they know that not one man in a million understands inflation. But inflation was a key feature of the new fiat currency. Now they keep the same name, so you don't realize that nothing has changed. But the reason they wanted inflation built in there, for governments, taxing inflation is a way of taxing yourself without having to go through legislation and make it visible. They wanted to pay companies less. But if you're used to charging $10 an hour, you're not going to settle for $5. However, if inflation can cause that $10 to be spent like $5, you're actually agreeing to work for less, but you don't even realize it. The median salary in 1971 was around $9,500, and a family of four could live on that. They only needed one employee to support this family of four. Today, the average salary is around $57,000, and it takes two employees and still a paycheck. So you have to understand that while you'd rather have $57,000 than $9,500, what that would buy in 1971 could support a family of four, but today it could hardly support anything. So what they knew were only two essential things. First, people marry the legal state money. So whenever they do these transitions, like we're doing now, they want things to stay as normal as possible. And second, they also knew that since people don't understand inflation, they are actually willing to work for a lot less money. Where gold is truly decentralized and invisible, you hold it, you just own it. It has no counterparty risk and has proven to be a hedge against inflation over time, as well as a hedge against geopolitical storms, which we have a lot of today. But it gave power to the people. So if you have money in your wallet right now anyway, it's kind of invisible because there are no chips in it. Therefore, you can preserve your capital, but not your purchasing power.
Gold is the only commodity, and it is a commodity-based currency, that actually fulfills the original four functions of money, which is a tool of measure, a tool of barter, a short-term store of value so that you're fairly paid for your labor today, and a long-term store of value so that no matter when you use that money, you are always fairly paid for your labor.
That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.